stands for stop loss, and TP stands for take profit, right? So when we want to edit our stop loss, we would then click simply and drag it down, giving us a stop loss. And we will click and drag up, since we're intending to buy, meaning we're looking for the market to rally, to indicate where we would like for price to take us out in profit on the trade. All right. So with that being said, if you look to your downside here where it says profit, it currently shows if you are negative or positive in a trade and how much money stands to be made as you're pushing up towards your TP, or automatically once it has been hit. Therefore, you're not going to lose any more than you've intended. Also, your take profit gets you out of a trade with the desired amount that you are looking to make on the particular trade setup, right? Now, let's cover the commission and the swap. Commission represents the amount of money that the broker has made once the trade has placed. Depending on the lot size that is used, the commission can either be bigger than its current number or smaller in direct proportion. Swap represents the money that the broker gets paid when you hold a trade past a 24-hour period. Think of it like a maintenance fee, right? So for example, if I was to place this trade and going into November 28th, price has rallied, and let's say I had a TP target of 45 pips, 49 pips in this particular case. Well, then as I went into a new day, the broker is going to charge me a maintenance fee for allowing me to have this trade running into a new day. Now, of course, your swap and your commission are necessary, right? These are the things that the broker gets on their end as a means of making profit, and then of course as a means of being able to pay back out to you profit when you click and try to get a withdrawal. Another important thing to note is that some brokers have what's called Triple Swap Wednesday. So that simply means, for example, if I was carrying this trade rolling over into another day, right? So it has passed 5 p.m. right? When the GMT time closes for a new day and starts back up on a new day, right? If this was Wednesday, and let's say my swap was at $15, well, with the brokers who do have what's called Triple Swap Wednesday, that swap would then go from $15 to $45, basically times 3. So for those of you guys who will be swing trading, please keep that in mind when it comes to the brokers that you'll be using. That way you are aware of the swap. And if you see a bigger number here than you were expecting, or if you see a bigger number than you saw last time, you understand why. Now, to touch on one or two last things, up here you can see that these are selected, and when taken off you can see that you can barely see any history or any space to your right. So when you right click on the indent, it pretty much shifts the end of the chart from the right border, allowing you to have space for candlesticks to develop as the market moves. And if you click on this one to your left, scroll the chart to the end on the on tick incoming, it simply means price will always keep scrolling to your right, providing some space for new candlesticks to develop when it comes to watching charts on MT4. So the pip counter over here shows you the current price EJ is trading at, right? It also shows you the spread, meaning the distance price would have to cover for you to get in profit. It shows you the high of day. It shows you the low of day, right? We'll get into that a little bit later. It shows you the candle time left remaining based off the time frame you're in. So you see if I clicked on M30, I would have 22 minutes and 40 seconds left, and click on the H4 candle, it will calculate that for me automatically, right? Last but not least, it shows your trade and the amount of pips you're currently up. So in this case, check this demonstration, we are negative 4 pips. And you can see the profit counter is at negative $46.27. And if I was to click X and get out of this potential trade, and if I was to click X and get out of this current position, it will take me out with a loss of $45.35. So you can see the balance gets updated automatically along with the equity and the margin. Now let's talk about our equity and let's talk about our free margin. Your free margin pretty much represents the amount of money available to place a trade using various different lot sizes. As you can see, when I go ahead and I type in, for example, 100 lots here, which is a very big lot size, by the way, and I was to click sell, my margin would decrease from 751 down to 694. Now, the thing to understand about margin, when your margin has made its way all the way down to zero, it means you are not able to place any new trades. All right. And once your margin is currently down to zero, from there, hopefully you're not in a position where you're about to blow your account. Now, your equity simply represents the difference in price. Now, your equity simply represents the difference between your current balance, right, and the trade that you're currently in. So in this case, that 100 lot put us automatically negative 2,000 because we have a spread to cover before we can be at break even. Now, once we got past the spread, we will be in profit, and you will see that number lose the negative sign and start to go up and up and up, symbolizing the amount of money we're making on the trade. And with that positive number, you will see your equity go up in relation to the profit that you're currently making. Now, once you get out of a trade, once again clicking X, it displays your new balance, depending on whether you made money or lost money, along with your new equity, and of course your new free margin. So these are the basics of MT4, understanding the platform that we'll be using when it comes to trading and of course making money.